Welcome to the September edition of LoadSmart's First Look, a monthly series that dives into the freight markets and the latest technologies that are disrupting the supply chain. Today, we have a good friend of mine, Brent Hutto, Chief Relationship Officer at Truckstop.com. Brent, thanks so much for joining.
Oh my gosh, it's an honor to be here, man. It's just with all the new things and great things LoadSmart's doing in the market, it's just great to be here to be a part of it.
So I'm fascinated, and I want to dive right in because I want to make sure we have time to talk a little bit about two things, really, which is market and Truckstop obviously has really unique visibility and look into both the supply and demand of the freight that's moving through your platform and the carrier side. So I want to make sure we dive into that. But also second is technology and really the perspectives and experiences you've had with scaling the digitization of your platform. But first we want to dive in and really I'll leave this pretty open. But market-wise, it's been a wild year with the pandemic and the shift of consumer behavior that's really thrown freight markets out of whack. I'm curious to see what you guys are seeing at Truckstop.
Yeah, well, I've been alive for 53 years, and you see a lot of ups and downs. And the old saying is, "Now you live in interesting times." And certainly, bud, we are living in some interesting times. I mean, who would have thought that we could have seen something more different than or better than 2017, 2018, that was a 40-year high in an industry? I mean, that was remarkable. I mean, people set their careers and their retirements on how well they did in 2017 and 2018, and whoever thought that something would exceed that. And we are at that point and have been for the last 7 or 8 weeks above 2017, 2018, 40-year historical highs, which is remarkable considering where we were in March and where the marketplace had gone from. It was cruising along at what I say better than normal rates anyways, or better than normal volumes and rates, where we were at about $2 a load and about 400,000 or 500,000 loads every day on Truckstop.com. That's our platform. And so, that's a pretty healthy, and it was like that all the way through 2019 as well. And then, of course, we got to the pandemic and the quarantine happened. We had a huge surge, which everybody saw. But that was kind of like a fear reaction, and then we had the most incredible cliff you've ever seen in your life, where it literally over 2 weeks went from 700,000 loads on Truckstop in a 24-hour period down to 164,000.
Wow.
An unbelievable drop. Rates went from above $2 down to $1.60. We had truckers lining up in DC saying there's price collusion, which of course the data will show you that's never happened. It doesn't happen in a competitive market-driven marketplace. So but what happened after that, nobody could have predicted. And I think, Jim, the thing to look at and to consider, because we're in that market where all we see these indicators, is that nowhere in the history of man has an entire country, much less an entire world, all worked together to solve one problem. Now, granted, many other countries in the world did not fare as well as the United States did, but the United States economy was already very, very healthy. So this rebound, it wasn't a V rebound, it's a super V rebound. And in the economic world, that means it went down and came straight back up. Now, super V means it went like an outlier. It just exploded, which is what it's done. It went from a bottom of about April 17th to 164,000 loads to the last 4 straight weeks. It's been over 800,000 a day on Truckstop.com, and the market pressure has gone from about 30, which is the normal, or actually below 30 when we had the quarantine and the cliff, to above 100. It's hit historic highs. The market demand index, the pressure in the market, has hit historic highs 4 straight weeks in a row, and that's over a 25-year period, which it just blows your mind how much this market has come back to benefit the carrier mostly and the broker once rates can get adjusted.
The volatility has been something I certainly, and I haven't been I've been in this industry for 12, 13 years now.
Oh, well, yeah, I know. Yeah, you're an expert.
It is nothing that I have seen, and in
Yeah.
terms of what you talked about, which was the sharp ascent, and then before you knew it, the bottom fell out, and it dropped with in a shorter period that it rose. But
Right.
then you had, going back to April and May, the
Right.
uncertainty of what's going to happen, right? Unemployment surging. And to your point, no one really knew what was going to happen, but what was created was this totally different phenomenon where, which now looking back makes a ton of sense, of saving the money that you had that you would spend on certain services and vacations, that was actually going to different areas, and they had stimulus that they had support there, but it went to buying things, right, and things to upgrade our houses or appliances, and that's now even still going to stores. There's incredible backlog, and imports seem to be still in a very strong position.
Oh, they're booming right now.
But it's fascinating. So 700,000 loads down to 160,000 within a period of 2 to 3 weeks, and then currently the last 4 weeks above 800,000 loads that are on the truckstop.com platform.
And hasn't ebbed off. It's not a plateau yet. The interesting thing about this is that here's the thing that blows and should blow your viewers' mind is that we're still not at the demand for volume of freight that we were in the beginning of 2020. So in the beginning of 2020, all of 2019 and 2020, we were at about 65 million loads per month. And that's the entire marketplace. It's about 750, 800 million loads in all the freight in North America. By the way, 50% of all the freight in the world moves in the connected 48. So it's a massive marketplace. But usually the market's about 65 million loads a month. We're still, this past month, in July, we're only at 59 million. So we're not even back at the normal demand. What's going on is inventories were low, and they're building those inventories back up. So the manufacturing, just you mentioned about ports and bringing those in, the retail sales of goods and e-commerce is booming. It's hockey sticking up, and they're getting ready, of course, for the saving part of the year, which is holiday season. So it's predicted it's going to continue to go really strong through the end of the year, and then start to plateau first quarter 2021, and then start to ebb off by the end of first quarter. But that doesn't mean it won't be a strong market. It just means it won't be an overwhelmingly high pressure market.
Yeah, no, it's fascinating. I was speaking to another industry insider today, and we talked about some of the shift and some of the shipper behavior that was prior of really running a supply chain on kind of a lean philosophy, but risk management wasn't necessarily the primary focus of running their supply chain. So you see, somewhat of a shift from extremely lean to getting caught off guard, and now potentially is building up inventories that might be able to sustain, which, to your point, kind of looking at Q1, if inventories really are built up, that obviously has an impact on domestic freight markets in a different direction. So
right, yeah, I think what the shippers, and I've talked to shippers just like you guys have. What I was just at a supply chain conference at Auburn University. Brian Gibson puts it on down there. It's a great event, and we were down there, and they had three major shippers. I won't tell you who they are, but three major big whale type shippers out there that were talking about how their companies now have a real appetite to adopt technology into their platforms. And we all know how fragile the transportation platforms and even the supply chain platforms or the supply chain process are for shippers. I mean, it got exposed through COVID-19, but you can't overcome it overnight. But certainly there's a much bigger appetite for technology and connecting seamlessly to their providers.
Which I think is it's actually a perfect segue here, right? And I want to spend some time certainly talking about tech or freight tech, but truckstop.com definitely one of the leading platforms and public capacity platforms, and you guys certainly cater to a variety of different carriers and with multiple different products. But you guys entered into this digital, load booking journey and launched Book It Now last year, I believe. And so I'm curious to hear, looking back the last 12 months, how has this journey evolved? How is the adoption amongst both your carrier partners and broker partners, and even if there's any learnings that you have?
Yeah, no doubt. Well, lots of great questions we can dig into there. So let me just take the first one, which is, In technology, it's said that it's not the big that eat the small, it's the fast that eat the slow. And so you've got to be fast. Freight velocity is very, very important. The ease of using a system is very, very important to the users of the system, because time, as we all know in freight transportation, is money. And being able to provide the right experience, the right opportunity for those to be able to view freight and to be able to transact freight is paramount. Now, we all know that this marketplace technology's been being adopted in lots of different areas and being utilized, and certainly the transparency of information that we were at the truckstop.com was a part of when we started in 1995. We've been cloud since even before cloud was a word. That the idea of that process has created an opportunity for technology to continue to revolutionize what goes on in freight transportation. And we as a platform recognized 5 or 6 years ago, as other sort of connected type network marketplaces, the way in which you buy and move stocks now is completely automated. The way we all know, where we all book and move on transportation on planes, the way that personal transportation moved when Uber came in and revolutionized the taxi cab industry, that was coming to transportation freight, because the last inefficient thing that you can move out of it is the manual process. And the manual process, and remember, notice I said the manual process. I'm not talking about taking the relationship out of it, because you can't. There's too many moving pieces and parts. There's too much that goes on that you can't take the human relationship out of it. I think that would put more risk into it than it would be worth. But the idea of automating this was a necessary conclusion in a marketplace that has hundreds of millions of transactions that go on in it. And so that was the whole idea on looking at a dynamic marketplace that's already transactional. How do you make it more efficient so the players that play in it, the brokers, the carriers, the shippers that move their goods in it, can actually get a better benefit out of it, and everybody inside of it can be enabled to grow their business?
Yeah, it's fascinating. And your clientele, your customer base, right?
Yeah.
You work with quite a bit of what we'd say the small and mid-sized carriers, right? That the level of technology in this industry has been lagging. And we like to say shifting from analog to digital, and this is coming very rapidly. But if you could talk about the adoption of this technology amongst a group that hadn't had access or exposure to it prior, right, and ran their business very differently, and obviously I would imagine this is providing some benefit to those guys.
Right. Well, that is the big question, is that when you have a very manual industry and an industry that's built on the communication relationship that way, moving it to an automated process is a patient endeavor. So if you think about the trucking industry, the freight industry, it's one built historically on relationships. And it's also one that doesn't change quickly because of the scale. You deal with marketplaces like this that are the biggest scale. We're talking about inside of the spot market, it's about 200 billion. The overall market's over $1 trillion of revenue. So when you have big marketplaces like that, they're not going to change quickly, and they shouldn't, because of all of the pieces that have to change into it. So you were talking about the players in the marketplace. Typically, the type of carrier that runs in the spot market is a very small carrier. Somebody who owns 10 trucks or less predominantly owns 3 trucks or less. Right. So the carriers that run among the spot market are independent owner operators, typically guys that own their own businesses and run their own trucks up and down the road. So these guys, when it comes to change, really are resistant to it a bit. Not because they don't want it, just like what they have is already working really well for them, and they're able to keep the lifestyle they want, which is really they love driving their truck. So the adoption of this technology has started very slow. You accurately mentioned we launched it last year. Truckstop.com did our Book It Now process, which is the first iteration, the very first in the digital process or the automation process. But the adoption is slow, and it's slow it's not slow because carriers don't want it. Because here's the thing: 78% of carriers pointed out to us when we did our research that they hate the negotiation process. They really just want to see it. They want to see that's a good rate. I know it's a good rate. I can compare it against my market trends on truckstop.com. That's a good rate. I'll take it right now. Let me have it. That's the book it now process. That's what they told us. So when you get 78% of a marketplace that says yes to something, you move on it, especially if you're a large network platform like we are. But you got to have all the players that are able to bring that freight volume into the marketplace available. So you've really got to work with the brokers in the marketplace for the adoption, because they've got to place the freight on there that they can trust to be able to move in that automated marketplace, because this is a high checks and balances trust marketplace. There's a lot that goes on. So the adoption presently, Bud, it's slow, and it's only because it has to be slow, because the brokers are only really putting loads out there that are to a trusted core carrier network, ones that they're already onboarded with, that they already trust them, they already know how they're going to behave, and allowing them to book it. You can see all of that on Truckstop's platform, but if you're not already a core carrier, you can't secure load. But I will tell you this, that since we launched it in November, obviously had very little activity in November, the first quarter of it, but since then it's hockey stick, and it is compounding hundreds of percent every week on it, where the more freight that's on there, the more that gets taken. So, and we don't really talk about numbers, because when you've got 100 million loads that move through a platform a year, if you talk about the way it's moving now, it's a very small amount. But what you do is when you look at when you have a network platform, you look at percentages, and you look at percentage growth of gain, and it's been outstanding. So we feel like this marketplace will continue to evolve through it once more brokers put more freight on there, and then more carriers are used to seeing it that way. Yeah. So it's really just it's an integration issue, and then to an adoption issue. But I'll guarantee you, it will come over the next 2 to 3 years, and it will be the way. If you're not integrated into a platform, if you're not integrated into a network, you're going to be missing opportunities that are out there to grow your business.
Yeah, no, it makes a ton of sense. And, I think even just the boom in e-commerce, right? And the behavior of buying online, right? It does somewhat warm up even the independent contractor, that their buying preferences have changed, right? Whether it was through this industry or outside. And the Amazon effect has definitely had some impact, but it sounds like you guys are definitely doubling down on this. And obviously, as you can aggregate the demand, it creates much more value on the platform for the carriers, which seems like it's certainly happening. And you're seeing some expansion amongst the brokers adopting this and integrating into the platform.
Well, to give you an idea on speed, I want to make sure I touch on this, because I think this is important to the carrier, because speed is everything, and it's important to the broker industry as well, because what you find is that on truckstop.com, freight that is still in the manual process but has all the information on it, in other words, including the rate, it moves in 60 seconds or less. So it's super fast. The Book It Now transaction is faster than that. And so the idea of being able to connect into a platform that gives you visibility, the transparency of information, it gives you visibility on both sides. On if you're a carrier, you get to see that, you get to see all available freight. Some you can take now, some you have to go through a manual process. Or if you're a broker, you can see how that freight is reacting to the market, and to be able to adjust it accordingly so you can move it as fast as possible. All super important inside of the automated, as you say, digitized market.
Yeah. It's interesting you mentioned that, because I remember being at a session or conference with the Truckstop team. Yep. And it literally is probably 3 to 4 years ago. And the discussion there was talking amongst brokers saying, listen, guys, if you put rates on loads, it gives you an X% better chance of moving it, right? And it creates this where your load will move way more effectively. And that was just trying to get people to put rates on loads, right? Because up to that point, you're giving away a negotiation, you don't want to do it. And now fast forward just 2 to 3 years later, it's well adopted that the logistics industry is certainly transformed into that, and it's widely accepted that this is what you have to do, right? And this is how it works, whether it's the e-commerce effect or not. But obviously, as that more of that acceptance, and now it's just the integration and buying and connecting into the platforms to connect to the carriers, which is obviously a very important part. You mentioned there that this was the first phase, or the first version of the Book It Now. I'm curious where you see this transforming. Where is this going? And then what do you guys see in terms of evolution of your product to continue to lead in that space?
Well, I'll go back to my statement about the fast eating the slow. Every technical platform has to be fast. I mean, LoadSmart was created for speed. efficiency and speed, same word in my book. All right. So you guys are really a good leader in the industry when it comes to solving that problem. Because the faster you can move something, typically the more profit you're going to make on it. If a carrier manager can move 15 loads instead of 10, everybody wins. If the carrier can secure that freight and make sure it works within their optimization of their trip plan, and they can choose this freight and that freight and this freight, and they can bank them all together, they can make more profit because they can move more freight. So it kind of all goes back to that opportunity to be able to be connected in a platform and connected into a network that allows those transactions to happen as fast as possible. And you're asking me about where are things going? Well, I'll tell you, that's exactly where they're going. They're going into platforms that connect together because, look, I got an iPhone or I got a mobile phone. I don't like to go to 5 different places to get information that I'm looking for on one thing. I want all those connected together. And when they're connected together, boy, it's a lot better experience for me. So you've got to take platforms, and that's the broker offer, that's the carrier connection, that's the network, not, whether it's a core carrier, whether it's an open market load, whether it's a private load, whether it's a dedicated load, whether it's spot contract, all that freight has to be connected together so you can have the best visibility into it to be able to place it where it's going to move. And so that's what we see going forward into this marketplace after 25 years of seeing this thing. But, we were cloud before it was cloud, which is kind of cool. And but it's the need to have a connected system. And then, and this is where Google gets everybody. They introduce the democratization of information. In other words, you better give me my info or I don't trust you. And that's why putting all the information out there on a piece of freight is very important to be able to moving it fast. Because when you put it all out there, it says you trust the person to take a look at it. You trust them to take and evaluate it and be able to move it for you. So that, to me, you've got connected platforms, you got transparency of data, and then the most important thing, and this is something that we talk about a lot here, is just the collaboration of 3 parties that have to have each other to be successful. If the shipper, the broker, and the carrier all work together more collaboratively and make sure that everybody's profit margins are top of mind, everyone will succeed. But so we've got to get past a little bit. And I'm not saying not be fair market and we're all competing with each other. I'm just saying that we've got to find a way that we're not trying to put pressure on each other to marginalize one side or the other, because we all have to have each other for freight to move.
And that's while we close this up, but it's something I've heard you talk about, and something why I really respect your perspective a ton.
Oh, thank you.
Throughout the years, is you are in it to help everyone succeed, right?
Oh my goodness!
In
Absolutely.
every session, you make that point very very clear, and I think it also the connectedness, the interdependency of a lot of different providers. I know you mentioned 3. I think there's a lot of different players in this
Sure.
this space, in this market. Quite frankly, it makes it a lot more fun too, right? I mean, it's not a one person in a siloed effect that's gonna really win, right? I think it's
Right.
those that will connect and choose and develop and nurture those partnerships. Those guys are going to succeed. So again, this has been awesome. Before we close this up, I have to go to this, because you are a Auburn guy in Tuscaloosa, Alabama.
I am.
So what are you thinking about for this SEC season, and how do you do it?
Well, I'll tell you, it's we're thankful here in the South, and I know the ACC brethren and Big Ten guys are happy to have football. I think the Big 12 just made the decision to open theirs up, and I'm sure the Pac-12 will make the decision next. And it's I think, just like everything in life, it's good to have passionate outlets that you're connected to, and certainly in the South, football is really, really part of our just socialization of things. It's nice to have it. Certainly there's a caution to be taken with a pandemic where you've got some part of our population that's not affected as much by it at all, and then there's another part of our population that has a big effect to it. So hopefully football can be one of those things where people can enjoy all around like we normally do, and help get us back to a little bit of life. But I certainly hope my Auburn Tigers always beat the Crimson Tide, which is so one day a year I have a real big beef with all my fellow brethren here in Tuscaloosa. Other than that, it's a great place to live.
Awesome. I'm with you. Well, again, Brent, thanks. This is awesome. Really
It's
appreciate
our pleasure.
you joining, and would love to do this sometime in the future again. So thanks again.
Happy to help anytime, man. We're here to help everybody succeed.